Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings so you don't have to. Today, we're cracking open an 8K from Aris Water Solutions. And no, this isn't about bottled water, it's actually about something a bit more complicated. You might say this filing is all about swapping one pile of debt for another. This report is dated March 11, 2025, and it's a quick snapshot of something important that just happened or is about to happen with the company. Think of it as an alert telling investors about a big move. So what's the big news? Well, Aris Water Solutions, through one of its businesses called Aris Water Holdings, is planning to sell $400 million worth of what they call senior notes that are due in 2030. Senior notes in this case are basically a form of debt that the company is selling to investors. Think of it like a company taking out a big loan, but instead of going to a bank, they are going to the public. Why are they doing this? Good question. They want to use this $400 million along with some cash they already have to pay off another set of notes. These are called 7.625% senior sustainability-linked notes due 2026. It's like refinancing a mortgage on your house. You take out a new loan with potentially better terms to pay off the old one. These older notes, the ones due in 2026, have an interest rate of 7.625%. That means Aris was paying 7.625% interest on that debt. By issuing these new notes, they're likely hoping to get a lower interest rate, saving the company money in the long run. It's all about managing their debt and trying to get the best possible deal. There's a date to keep in mind, April 1, 2025. That's when they plan to pay off those older notes, assuming everything goes according to plan. It's called a redemption date. Redemption is like the finish line for the old debt. But there's a catch. This whole plan depends on them successfully selling those new notes. If they can't sell at least $400 million worth, the deal is off and they might have to keep those older, higher interest notes. This is what they mean by conditional redemption. It's a plan, but not a guarantee. They mentioned an indenture dated April 1, 2021. An indenture is basically the legal agreement that outlines all the terms and conditions of those older notes, like the interest rate, the payment schedule, and what happens if Aris doesn't pay up. It's the fine print that governs the relationship between Aris and the investors who hold those notes. The company included a press release as an exhibit. Companies often issue press releases to announce important events like this debt refinancing. It's a way to get the word out to investors and the public. This press release, dated March 11, 2025, is simply a formal announcement of the plan. It's a way for the company to control the narrative and communicate directly with investors. Now let's step back and look at the bigger picture. Aris Water Solutions, as the name suggests, is in the business of water. Specifically, they provide water solutions to the oil and gas industry. This includes things like water sourcing, transportation, treatment, and disposal. The oil and gas industry uses a lot of water, especially in processes like fracking. Aris helps these companies manage their water needs in a sustainable and cost-effective way. It's a crucial service, especially in areas where water is scarce. So why is a water solutions company issuing debt? Well, running a business like this requires a lot of capital. They need to build pipelines, treatment facilities, and other infrastructure. Debt is a common way for companies to finance these investments. By refinancing their debt, Aris is trying to improve their financial flexibility and reduce their borrowing costs. This can free up cash that they can use to invest in their business, expand their operations, or even return value to shareholders. Now let's talk about the risks involved. Debt is a double-edged sword. On one hand, it can help companies grow and expand. On the other hand, it can also put them in a difficult financial situation if they can't make their payments. Aris operates in the oil and gas industry, which is known for its volatility. Oil prices can fluctuate wildly, impacting the demand for Aris's services. If oil prices fall, oil and gas companies may cut back on their production, reducing their need for water solutions. This could put pressure on Aris's revenue and cash flow, making it harder for them to repay their debt. That's why it's important for Aris to manage their debt carefully and maintain a strong financial position. What about sustainability? The older notes that they're redeeming were sustainability linked. This means that the interest rate on those notes was tied to Aris's performance on certain environmental, social, and governance goals. Companies are increasingly issuing sustainability-linked debt as a way to demonstrate their commitment to responsible business practices. It's a way to align their financial incentives with their sustainability goals. It's also a way to attract investors who are increasingly focused on ESG considerations. ESG stands for environmental, social, and governance. These are factors that investors use to assess the sustainability and ethical impact of a company. Looking at Aris Water Solutions' move to refinance its debt, it seems like a strategic play to reduce costs and manage their financial obligations more efficiently. They're essentially betting that they can get a better interest rate on the new notes than they were paying on the old ones. This could be a positive sign for the company, as it suggests that they're taking proactive steps to improve their financial health. However, it's also important to keep an eye on the risks involved, particularly the volatility of the oil and gas industry. The success of this refinancing depends on a number of factors, including market conditions, investor demand, and Aris's own financial performance. If everything goes according to plan, it could give Aris more financial flexibility to invest in their business and pursue their growth strategy. However, if they're unable to sell the new notes or if oil prices fall sharply, they could face financial challenges. It's a calculated risk and only time will tell whether it pays off. In conclusion, Aris Water Solutions is making a calculated move to refinance its debt and improve its financial flexibility. They're swapping one set of notes for another, hoping to get a better interest rate and save money in the long run. It's a common practice in the corporate world, but it's not without its risks. The oil and gas industry is volatile, and Aris needs to manage its debt carefully to ensure its long-term financial health. It will be interesting to see how this plays out and whether Aris can successfully navigate the challenges ahead. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more deep dives into the world of corporate filings. What company would you like us to decode next? Let us know in the comments below.